Recording is started, so officially, good evening, happy Tuesday, and welcome out everyone to the Options Income Launchpad. My name is Scott. I will be your host. Part 1 with Glenn, beginners Q&A. Part 2, open forum, anything goes. Anything goes. Yes. Okay. Okay. If I could advance my slides, I would. Hold on. As always, what we do is for education and illustrative purposes only. Nothing's intended as a recommendation to buy or sell. We're not brokers or advisors. We don't give personalized investment advice. Any decision made should be done so at your own risk. Yada, yada, yada. Let's go to the platform. Okay, I can't remember because my memory is horrible. I can't remember what we were supposed to talk about. It was stops. But I don't know that the person who wanted to do it is here. So then I'm like, well, wait a second. Okay. Finding puts. If we don't do anything or the talking about stops, I think that's a great one. Yeah. That sounds good. Okay. Ideally, putting stops in when you put the order in. Okay. Okay. That's fair. Yeah, we could take a look at that. Definitely. Okay. We'll do a couple of things. Yes. Yes. Of course we will. Um, yeah, okay. I think if you go back, you'll hear me say that. Looks like a synthetic stock trade. But not. A synthetic long or a synthetic stock, it's close because a true synthetic stock is the same strike price. You buy a delta and you sell a negative delta, which turns it positive, and if you add those two together, if they're the same strike, it gives you a delta of 1, which is exactly like the delta of the stock. Now, if you open them up a little bit like yours was, it's slightly different, but it's the same basic premise. What you gain from time decay on the option you sold, you lose from time decay on the option you bought. It's a you're selling a put to try to buy a call. Anyways, yeah, that is indeed a synthetic long. Okay, so let's actually use this time. First and foremost, we're going to dive in. And here is. So, a couple of things. Number one, If I buy the option at 220 and I risk $1.10, although now I'm buying it for $1.13 or $2.13. So I'm gonna do this two different ways. Okay. If you've ever looked at stops, this may be one that you want to go back and pull the recording for. So I can stop out if I'm putting in a hard stop now. Would I be more likely to put a hard stop in now? Yes, 100%. Because that's part of how we adapt and adjust to market conditions shifting from our market posture. Better market posture, we give things more room. Worse market posture, and we like to step back a little bit and make sure that we don't take stops or take losses unnecessarily. Okay. Okay. So let's go through these two scenarios. One scenario is I buy the option and then I set a stop based on the price of the stock. One scenario is doing the same thing based on the price of the option. Okay, so first and foremost, we'll do 3 of these. Now, what I'm going to do here is I'm going to right-click this and I'm going to create a duplicate order. So now what do I have? Now I have, where's my drawing tools? So I'm now in order entry, you can see here, and I said I'm going to buy 3 contracts for $2.13. That will be a limit order first thing tomorrow, good for the day. Okay. Now, what do I want it to do? I want it to trigger something. So you can see I've got all these different ones, but the easiest one is this first one, first trigger sequence. So if I click that, what that allows me to now do is it allows me to right click in here and create opposite order. Create opposite order. Okay? And you'll notice that I have a green order to buy, and now the opposite order is to sell. Okay? Now, as I'm going through this, make sure you stop me and ask for questions or to clarify. So first and foremost, let's do a option stop. So I'm going to actually place this as a stop here. Now, because this is a stop loss, I want this good till canceled. And you can see, so if you look at the trade alert says $110 of risk. So if I buy it for $2.20, my stop would be at $1.10. If I buy it for $1.13, I subtract $1.10. That's what I'm willing to risk. So if I subtract $1.10, that puts my stop at 103. 103. Now, how much am I risking? I'm risking $110. So if I do 3 contracts, that's $330. So very, very close. Very, very close to 300. So it's about $100 a piece. Okay? Now, that's it right there. That is it. That's all I have to do. If you look here and I hit confirm and send, you'll notice what happens. Order number 1, buy. Right? Order number 1, buy 3 contracts at $2.13. Now, as soon as that order fills, it's going to trigger the next order in line. The next order in line says to sell my 3 contracts if the option drops down to $1.03. Right? Down to $1.03. And that's it. At that point, I've now contained my risk at $1.10 per contract. And if I hit send on this order, nothing's going to happen because it's after hours. But if I go in here and I go to working orders, you'll notice here that this is working. That's to buy it. This is waiting for the trigger. Once it triggers, it'll be ready to go, right? Once it triggers, ready to go. Now, I'm going to cancel, and actually I'm going to cancel this whole thing. Cancel. Okay, back to analyze. Is the stop a limit or market stop? Market. I set my risk to $1.10 to lose no more than $1. Yes, exactly. $1.10 per 110 per contract. Yeah, that's exactly right. Okay. Questions? What other questions? Why did it say max loss was 639? Because it's looking at how much I'm paying. So $2.13 is $213 per contract times 3, 639. Technically, the max loss is 639. We're putting in a managing order to not let it end up being that much. But theoretically, we could lose everything that we put into the trade. Now, we're placing a stop, but for example, what if the stock gapped down from 70 to 60 overnight? Well, our option's going to be worthless. It doesn't matter that we didn't want to lose more than a certain amount. If we aren't able to get the trade closed, there's really nothing we can do about that. So let me redo this. I'm going to create duplicate order. And I'm going to make this first trigger sequence, and I'm going to right click it, and I'm going to say create opposite order. So again, if this is just a stop, I'm going to change this to good till canceled, this to stop, not limit, stop, which means there's just this one price, and when it triggers there, so this was at 1.03, there it was, okay? And there it was. Now, what else can I do with this? Thank you, Stephen. I want you to notice what's happening is when I make that change to market, and this says market, and this says good till canceled, this green button grays out. Right? It grays out a little bit because it won't let me use it now. Why not? Well, if I come over here, there's an error message in red. Market order must have day for good till for time in force. That's what it says. It must have that. Is that true? Actually, no. It's not always true. It's mostly true. Mostly, but not always. When is it not? Okay, so let's get up that information. Now, this is going to be where the first one we did was an actual stop order on the option. The next thing we're going to do is a conditional stop on the option based on the price of the stock. So I can either do my stop based on the option price, that's an actual stop order, or I can do it based on the stock price. Either way, this first part, Kent, back to your point, as this is something we're trying to do all at once. I want to buy the option and trigger the sell at the same time. There's a magic little cog. You can't even see it. You're like, where's that magic cog, Scott? Ooh. It's not there. Yes, it is. It's not there. Yes, it is. What does that magic cog do? And in fact, you know what? If possible, I would have everyone try this. Back in the day, you actually used to have to request this. You would say, hey, can you turn my advanced order capabilities on so that I can do stops based on the price of the stock? And then they would have to switch it so that you would have that capability. I haven't heard that in a while. So I'm wondering if now that's not the case. There's no need. Ken said, I was taught to use that. Oh, good. Well, if you were taught to use it, that's great. A lot of times that cogwheel goes unnoticed. It goes a little. I'm not sure why the audio is going off today. There we go. Now, let's click it. Steven's paying close attention to keep me honest. If I click that cog, what happens? I get this little menu here. Okay. So I get this menu here, and what can I do with this menu here? I have the ability to take, now it says sell, that's good. 3 contracts, that's good. Market, that's good. Good till canceled, yes. If what? And I come down here. Submit this when at least one of the following conditions is met. At least one. It can be one or the other. Okay? It can be one or the other. First condition. If the stock drops down to 69.05, I'm going to give it a little more room. Let's say 68.05. I'll actually go in the middle, 68.55. That was right in the middle. Right in the middle of my zones that I put out. Okay? And then what? And then I'm going to go to the next line down. Now, the first trigger was less than or equal to. The second trigger is going to be greater than or equal to. Because what I'm going to do here is I'm actually going to place the target too. And I can say if it goes up to $79.40, I want to get out. So I hit save, I hit confirm and send, and now I have this order. Buy 3 at $2.13. If you can do that, immediately put a stop loss in place. That sells it if it drops down to 68.55 or if it goes up to 79.40. Either one of those two conditions comes to fruition, sell it. Sell it for a gain, sell it for a loss, whichever it is. Okay. And now I hit send and I go look and you can see working, waiting for trigger. Both of these working, waiting for trigger. No matter how I end up sending it, that's what happens. Okay. Thoughts? If one has placed a call already, yes. So if you see I have DAL, so I can come in here. Is there an order? I don't think there is. So I could right click on DAL, create closing order, and then I hit sell. Now, when I get here, same two things. Market, good till canceled. Nope, sorry. Stop, good till canceled. $1.03. Bam, there's a stop. Or market with the cog. And then I put in my 68.55 threshold. Save, confirm, and send. So now, a couple things to think about. Number one, the stop loss. The stop loss is, in this situation, a held order. What does that mean? So a lot of people are like, oh, I don't want to put a stop because I don't want the market maker to come and pick it off. Well, this is a held order. That means it is not, right? That means it is not seen by the market makers. They can't see it. It doesn't exist as far as they're concerned. It's held, meaning it sits on the broker's computer until it has the right information, and then it triggers. Okay, so that is an advantage that you can do, is because of that. Glenn, good to see you. Okay. Okay. Questions about any of that we just went through? All right. Well, let's go build some put searches. Worth saving. Oh, good. Good, good. Okay. Let's run a search. Okay, let's see. Kent, I agree. And if we're doing hard stops, we have to be very careful because that's intraday. And I don't like doing intraday stops when I'm bullish, like 5, 6 or better. But as we see our market posture deteriorate, certainly we have opportunities to get a little bit more strict as far as that goes. Okay. Any other questions? Let's run a search. This was definitely a good one today. A secret stop. And that's, what it is. It is a little bit of a secret. The fact that the market makers, what is going on? The fact that the market makers don't have access to it, that's advantageous. I think that it's very helpful to know that they can't see it and they're going to go try to pick you off or something along those lines. Okay. Let's go run a search. Now, what are we doing here? I've got over 2 million, over $10 optionable and shortable. I'm going to do a couple of things. I'm going to switch one thing here. This is just, if you go to our circle page and you go inside and you click on the link for the search, that's what you're going to get. Now we're going to customize this, right? Now we're going to customize it. Okay. Okay, so here we're going to switch the price above 50 to below. Now that's going to change things around a little bit, but it's still not quite as much as we want it. We want a little bit more still. We want a little bit more. Okay, let's keep going. Okay. I'm also going to add these two here. Performance number 1, month up. Month up. Up for the month. Okay? Then the second thing is going to be month down. Whoops, sorry, I was going the wrong way. Month down, that's the pull. Week up, that's the bear flag. Not necessarily, but to some extent. Now, that doesn't give me a lot. I've only got 17 stocks. This is a lot of the list. But what I'm looking for are things like, for example, here, where it's been dropping. And then it turns up, but it looks like it's what? Ready to drop again. So let's pull this one up. OMER. Let me know if this is making sense. Okay, let's keep going here. Okay. Absolutely. Okay, good. Let's see if there's any that we might actually consider. Okay. First Solar, is that in here? Ah, yeah. Yeah. That one's headed back down now. Let's pull that up. And I like the way you phrased that. Was FSLR. What have you done for me lately? That's the question. Okay. What am I calling this? Um, Basic bearish scan. Yeah, just a basic bear. Okay. Once you set the filters, it actually runs as you go. It's dynamic. So anytime you set a filter, for example, if I were to, right now I'm at 17. If I took this and said any, it's back to 135. But once I set that up and say, hey, I want it up for this week so that I know it's been going up. Now only 17. Here is the full scan. For anyone who wants it. Let me see here. Okay, let's see. Okay. Let me send you this. Basic bearish scan. Boom. Click on that link. That'll run it. And that'll tell you maybe what went wrong. Okay. Well, we have a couple minutes. Any questions about the search or the results? Any questions about the stops today? Any questions about the market tomorrow? Anything like that? Okay. Amazing. Let's talk about the market tomorrow. Well, I mean, as of right now, it looks like things are, holding up. This is all on Finviz, Kent. Exactly right. Yep. Yep, that is exactly right. Let's go take a quick peek at some charts before we're done. SPY finished flat in the after hours. Let's look at the futures. Futures are marginally, I mean, they're also basically flat. Yeah. Let's see. I mean, we look poised, like we could be trying to bounce. That's how it looks to me. Let's take a look at the Qs. After today, yeah, not looking great. We had a lower high. Now we have a same low. So yeah, we're trying. We're trying. We'll see what happens. I will be on with you guys tomorrow morning at the usual time in about 12 hours. Gold and silver, sure. Let's take a look. Let's look at the precious metals. Well off the highs, but trying to stabilize after this last little push up. Silver looks a little bit worse, actually. So I would say, be patient, watching things materialize when it comes to the precious metals. IBIT. Yeah. Yeah, here's the futures for Bitcoin, BTC. Okay. Okay. Yeah, not looking great. Well, we're looking for it. See what the market brings tomorrow. To think it was at 120. Yeah, we're almost half of that, right? Any benefit to trading these? Not for me, not right now. I don't love them. I don't love them. So, all right. Well, listen, thanks everybody for hanging out. I hope this was informative. I hope you have a great rest of your night. I will see you guys tomorrow morning. As always, happy trading.